Property Casualty exam questions. Welcome to the quiz. What is the purpose of an installation floater? Is it A, to cover materials, machinery, and equipment while being installed at a job site? Or B, to float the premium for an installation? C, to cover installed equipment after the job is complete? Or D, to provide liability for installation work? The answer is A. Contractors face risk of loss to property they are installing, fixtures, machinery, HVAC, during transit to the site and while being installed. An installation floater, inland marine, covers that property against physical damage from covered perils until the installation is complete and accepted. Post-completion is property policy or completed operations. Not premium float. Not liability, that's CGL. Installation floater protects in-process installation materials/equipment. Next question. What is an all risks or open perils policy form? Is it A, a policy that covers all imaginable perils without any exclusions? Or B, a policy that covers direct physical loss to property unless the peril is specifically excluded? C, a policy that only covers named perils? Or D, a policy for all liability risks? The answer is B. Traditional property policies were named perils, only listed causes of loss, fire, windstorm, theft, etc. were covered. All risks or special form or open perils policies flip this. They cover any direct physical loss or damage unless the policy specifically excludes it. This provides much broader protection against unforeseen events, with the burden on the insurer to prove an exclusion applies. No policy covers literally everything. Exclusions always exist for war, nuclear, wear and tear, etc. Named perils are narrower. Liability is a separate coverage type. All risks means everything is covered except what's carved out by exclusions. Next question. What is the purpose of inflation guard coverage? Is it A, to automatically increase property insurance limits at renewal to keep pace with estimated inflation? Or B, to guard the insurer against inflationary claims? C, to adjust the deductible for inflation? Or D, to provide a benefit increase in health policies? The answer is A. Construction and replacement costs rise over time due to inflation. Inflation guard, or automatic increase endorsement, automatically raises dwelling, building, or contents limits at each renewal by a percentage based on construction cost indexes or a fixed rate. This helps maintain adequate coverage and avoid coinsurance penalties without the insured manually requesting increases. It does not protect the insurer from claims inflation. Deductibles are not adjusted. Not for health benefits. Inflation guard keeps property limits current with rising rebuild costs. Next question. What does loss reserve represent on an insurer's balance sheet? Is it A, an estimate of the funds needed to pay future claims and claim adjustment expenses for reported and unreported incidents? Or B, a reserve of cash to pay future premiums? C, a fund set aside for catastrophic losses only? Or D, the insurer's retained earnings? The answer is A. Insurers must maintain loss reserves liabilities on the balance sheet estimating unpaid claims and adjustment expenses. This includes case reserves for known claims and IBNR, incurred but not reported for unknown claims. Reserves ensure solvency and future payment ability. Not premium reserve. Not catastrophe only. Not retained earnings. Loss reserves reflect expected future claim payouts. Next question. In a commercial package policy, CPP, what is the purpose of the common policy conditions form? Is it A, it contains conditions that apply to all coverage parts within the package, such as cancellation and inspection rights? Or B, it lists conditions common to all businesses? C, it defines the perils covered? Or D, it is the declarations page for the package? The answer is A. A commercial package policy combines multiple coverages, e.g., property, liability, crime, inland marine, under one policy for efficiency. The Common Policy Conditions Form, usually IL0017, includes general rules that apply across every coverage part in the package, provisions like cancellation, changes, inspections/audits, premiums, transfer of rights, and concealment/fraud. These are not business-specific conditions. Perils are defined in individual coverage forms. Declarations are separate. The Common Conditions Form ensures uniform rules for the entire multi-coverage package. Next question. What is the main purpose of business interruption business income insurance? Is it A, to replace net income lost and pay for ongoing expenses when a business must suspend operations due to a covered property loss? Or B, to interrupt business for renovations? C, to cover income lost due to poor economic conditions? Or D, to provide employee benefits during an interruption? The answer is A. A fire or other covered loss can force a business to close temporarily, causing lost revenue while expenses, rent, payroll continue. Business income coverage, formerly business interruption, reimburses net income that would have been earned plus necessary continuing expenses during the period of restoration after a direct physical loss to covered property. It does not cover renovations, economic downturns, or employee benefits. The purpose is to restore the business financially to where it would have been without the interruption. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.